So based off my last video, here's an example of an intraday entry that looks amazing. It's like, holy crap, look at this thing. Let's get in this thing. Look at, for some reason the volume's not working right now, but the relative volume is monstrous on this. The relative strength is big. This thing's accelerating. The volume is rising. Like, this is juicy, right? It's probably all flat bottom HAs, all the things that you want to see. And also this is like prime 101. Like, you look at these types of charts, you look at other people's like, hey, here's how I won this much money or whatever, and you see that, and like, this is literally like winning lottery ticket type stuff, or you watch this and it's like you just got dollar signs in your eyes, and this stuff lures people in. And this is, I took an entry like right around there, and I'm stuck holding this thing too. So this is a mistake I made as well. This intraday chart looks amazing, but here's the problem with it. EYPT is a Momo stock, which is okay. Like, this might continue even further, or you might see some sort of climactic action through there. You might have been trading from here and just trying to get like $1 out of it or something. That's reasonable. But contextually, it's a terrible entry. And here's why. You have all sorts of lines on this thing. So the first line you have is this like algo line up through to here, but you broke through it on this candle. So maybe you entered through there and you're like, yes, I broke through it. But the first mistake you made is that you didn't wait to see if this line was just an overextension and we're going to slingshot back, which, by the way, we did. So you didn't see this line get tested as support in your favor again. Secondly, on this day, let me just take off all the lines. On this day where you had a monster gap up, by the way, this D1 is insane looking. You have a monster gap up. The price pre-market actually reached way up here. So pre-market it way up there. So if you have a big candle through here and now you're trading this candle, that's not bullish. That's just a little pullback. This, on a higher time frame, is merely just a little pullback. When you put the anchored volume weighted average price, it's kind of like right around through there. So this is a perfect example of a trade that looks amazing in the traditional way that we look at trades. Like, a lot of us learn from, like, you know, find your gappers and get in your gapper and just jump on it in the morning, or get that low float momentum ticker. But contextually, it's about to trap you, because on a higher time frame or on the bigger picture, it's not what you think, right? So it pulls all the way back down underneath that anchored VWAP, which is right through there. And now, really what the line was, it was something like this, like that. So now you're stuck in this trade. A better option would have been for it to break the anchored VWAP, which kind of like came in down through there, right through there, retest it as support, come back up, re-break that up sloping algo line up through there, and then you can take it like from here up. But you see a move like that and your monkey brain turns on and you go, I gotta get in this thing. But you just got in the riskiest, most aggressive type of move that you possibly can get into. So that's an example of not using the 5-minute chart to confirm the D1 thesis. You're just chasing tiny little ghost moves on the 5-minute chart, and you don't understand the context of the move.